Marketing, it's supporting business growth. So we need to know where our business is heading, what are our business metrics, and then we look at how marketing can support in that sense.
That's what gives you the credibility as a marketer. When you understand what your base levels are, what the drivers are, everyone's supporting, where you can drive growth.
I see myself as a business leader. It's just that my specialty is in marketing. I'm there to help to grow the business.
One of the challenges a lot of people have is they go, oh, I don't have the data to be able to justify it, and I don't really know, but they haven't painstakingly made the relationship with the people they need to and say, this is valuable for us to understand to get you more money to invest.
You need to establish yourself in the organization.
Yep.
So that people at least trust that you're sensible. And yeah, you're creative, you're innovative, but you're also sensible and you know the business and you think for the greater good of the business.
I love to hear that. Hello and welcome to the CMO Office. My name is Nikki Taylor, the Marketing and Communications Director for Analytic Partners and your host. Today's CMOs are expected to deliver immediate results, build long-term value, and justify every investment along the way. In finance services, that challenge is even greater. Longer decision cycles, high trust, and complex customer journeys make the measurement far from straightforward. So, how do we prove what's really working? And how do you make the case for bold ideas? I'm joined by Haymans Fung, the Global Head of Wealth and Retail Bank Marketing at Standard Charters, and we'll explore how she approached full funnel measurement, builds the case for creativity, and is expanding the marketing's role into new areas like health and well-being. Welcome, Haymans.
Hi, thank you. Thank you for having me.
Hello and welcome. All right, so thank you for joining us today. I'm super excited because, we're going to talk about a whole lot of things today, including health and wellness, which I never thought I would with a finance institute. So that's going to be exciting. But the first question I have for you is finance services is one of the most scrutinized categories. How do you prove that the marketing's contribution is growth in that environment?
It's a very good question, and it's the kind of question that I get all the time from my bosses.
I bet you do.
Yes. I think number one is to be very clear of the business strategy and the business priorities. Marketing, it's supporting business growth. So we need to know where our business is heading, what are our business metrics, and then we look at how marketing can support in that sense. So when it comes to marketing, there is this long-term, medium-term, and short-term goals.
Yep.
So we look at it from a full funnel. Prime funnel is mostly for longer term growth. So, prime funnels are things like advertising, OOH, like outdoor billboards, TV commercials. So those really big investments that we may not be able to measure the direct impact to acquisitions from a short-term perspective. But they are still important because prime funnels are really helping us to widen the funnel so that we can have more clients and new clients coming in and building the trust and image that you just described in your problem statement. So that's more prime. And then when it comes to medium and lower funnel, they have different roles. Like medium funnels is a lot of our engagement, that building the emotional connection. And then low funnel, we all know is something that is performance driven, measurable, directly linked to acquisition. So when it comes to this full funnel, each funnel also have, a different KPIs and a different role in the marketing. And then we look at how these different funnels and KPIs link to business.
So basically, for marketers, we're talking the full funnel, which we all understand, but we're linking them to the business KPIs at the top. And I want to ask, how do you take those prime ones, which I love that you talked about, that it's not on the short term, but then how are you linking that to the business objectives and how are you measuring that to be able to justify the spend?
Yeah. So when I go in to my management team or to my CFO, I do not go in with a silo proposal telling them, oh, this is how much I spend on prime. This is how much I don't do that. I look at it from, as I said, the business goals, the business strategy. And then when it comes to our full funnels, then what are the different funnels playing in the role of linking to the business KPIs? Then we are showing our CFO or our management team how do everything work together because everything have to work together. I cannot just have one campaign for 3 months and then nothing else. So I need to tell them how this link to all the full funnel metrics along the line.
And can you give us an example? Because I know we all sit there and we all have the same conversation.
Yes.
But I think one of the things I've reflected on recently is it really comes down to the data that you have available, the measurement that you do, and in lieu of that, your understanding of signals and assumptions. So can you give us an example where you've gone in and what exactly you're showing them rather than this just campaign? Because it depends. Like sometimes you get a CFO that is, understands brand, will back it. It's a small percentage. They're okay. Others are like, no, justify it. And you only have 3 months, but it's not going to work. So
Correct.
Can you give us an example? I mean, Standard Chartered is a big brand. So
yes. Okay. It's a good question.
And you do a lot of brands. So but how do you go in? Because it would still be a fair percentage of the spend.
Yeah. I'll give you a concrete example. Every year we have 2 global campaigns that talk about our wealth propositions, talk about our international banking capabilities. And this is global campaign, so it's full funnel. And we spend roughly 70% of our money on Prime. Okay, so
it's great.
Yeah. Then you're asked, okay, then what about the rest? How do these Prime channels prove work and link to the rest of the funnel? So we spend roughly 70% on Prime, and then it's a multi-countries campaign. So we buy regional channels, Bloomberg and all this, right? And then outdoors, all this. But then at the same time, I also talk to my different countries, local countries team, and I make sure at the same time when we're running all this Prime, which are driving a lot of traffic, we're driving a lot of awareness, then locally, they also have the middle and lower funnels campaigns that is driving acquisitions and having call to actions client campaigns. Then within the same period of time, then we can see how, because we on the top funnel, we're driving a lot of awareness and traffic, but then the traffic are not lost because locally they do have acquisition offers, they do have call to actions to capture all this, awareness and traffic and results, and then turn into business. Because when it comes to acquisition, that we can actually measure. So it's as I said, right? It's full funnel and everything work together. Brand Prime, yeah, we do all this nice image. We're building the more capabilities. But then it doesn't mean that's it, because on the ground, the countries at the same time having client campaigns, and it can be targeted to our existing customers as well for cross-sell, upsell. So that's how all these channels can work together. And maybe you have a question afterwards, but at the same time, I will have a monthly report to look at how this is driving the actual business outcomes to the CFO and also to the management team. So it's 100% transparent.
I love that. So if I simplify that down for some of the marketers listening, basically you're doing the great 101, which is you understand that there's only 3 to 5% in market at any one time ready to buy or whatever. And you basically got that always on, ready to capture them in the acquisition. But 70% is up the top, making sure that you create the demand, which I love to hear that. I think that's really great, which brings me actually to my next question, which is that a lot of the marketing measurement still overweights acquisition. And you just gave a great example there of how you are looking and flipping the script, which is wonderful, because in Analytics Partners, we see that actually brands should take at least 50-50, if not more, not the whole percent, but actually quite a large bit. But how do you measure the full customer journey, especially in wealth where decisions take time? So that was a great example of the sort of flywheel that you're starting, but how do you account for that delay tactic? So obviously you can see that you're creating the demand and you've got the lower funnels to capture those that are ready, but some that see at the top might still take 12 months to want to do something with you. So, how are you measuring that? Have you actually adjusted some of your sort of attribution metrics, or, do you have an MMM in place, or what are you doing to make sure that you can capture that?
Yeah. Well, first, we the marketing team within the bank, we're very clear what's the value and what's the positioning, like what's the role. So I do not position ourselves as we are the core and the only driver for business. That would be quite unrealistic to say that, because we are a bank. Our business models, as you said, it's people make decisions with longer time. And also we have RMs and distribution channels who are very powerful and influential when it comes to, understanding clients' needs and then, getting business done. So that's, we understand.
Okay.
So we, as you said, we do have MMMs. When it comes to MMMs, we actually not just looking at marketing investment. We look at interest rate. We look at, the stock markets. We look at how many events we have that month. We look at how many branches. We look at RMs, all this, right? So at least it's more from a data perspective. We can get a sense of the attribution or the impact of marketing. But that's only one part. As from the very beginning, I said it's important that we play our role, because we're not telling the management team that we can do everything and all you need to do is marketing. We think about it from a more system, it's more like a whole system. And then marketing there are a few things, right? One is to build the trust and the emotional connection. Secondly is really to, as I said, right, widening the funnel for the next 6 to 12 months to attract new customers coming in. And then the middle and the low funnel, as you said, would be more like acquisition. So that's one. Another thing to look at is the cut of the products. Because different products, the life cycle is also very different. When it comes to credit card, it's very short term. It's offer driven. And then it's more like lower funnel, always on work, as you said. But when it comes to, it's quite interesting. When it comes to like investment products or fund products, then we also look at the market. Like if the stock market is not doing so well, then it may not be wise to push like online equities trading products. Right. And also when the timing like now is like a lot of uncertainty, geopolitical situations and all this, then there's a lot of trust that people need. Then we uphold our wealth expertise and our like CIO house view. So also different time, different markets, like situation, we look at what's the right thing to do with our clients and what to build. So that's, another cut to look at. It's more from a product. And then another piece is really also to look at, the business objectives. Sometimes we need new net money coming into our bank. Then there are like deposit products or mortgages products. So so there are actually, and this is what I like about my job, right? There are a lot of levers. It's very interesting. And you need to know the business well enough that you explain to your management team or, and to tell them, this is the right time to do what messaging, what products, and what channels and what funnel. Because some of this trust, you can't just like do it with performance. A lot of this trust, like CIO content, right? We do a lot of CIO contents at House View. And these it takes time to build that trust. And people need to see that you are giving a credible input and credible house view from time to time. You can't just like, I listened to you once and then like 6 months, we always go back. We actually will go back, like say, we said it 6 months ago. And this is what has happened. And so these things, needs to be building up with time.
So if I play that back, basically the first thing is that you do, and for those that don't know what MMM is, it's marketing mix modeling. But from the way that you describe it, music to my ears, commercial mix is sort of what you're doing, because you're looking at the base of everything outside of marketing control. And I think that's so important. And that's giving you the viewpoint to say, I don't own everything. There's not all the levers. However, what I do own and I do control, this is what I can do. Which brings me to the next point, which is, you're looking at them as a halo of what does the brand bring in and how does that halo do with trust and when to dial it up based on what's happening in the market. But then also on the business needs, when to dial up based on products. So if I need a lot of cash coming in and credit cards is short term and always on performance, let me dial up on that or something else. So I think that's great. You're showing how you're looking at what's happening on the market, pivoting on the market, and being able to pull the levers for marketing that actually drive growth, but also not blindly going into the CFO going, yeah, it's all us, if the market's in the great way. And I think that's what gives you the credibility as a marketer, when you understand what your base levels are, what the drivers are, everyone's supporting, where you can drive growth. And those conversations, like you said, around trust has to dial up. We need to dial back on this product. It's not the right time. Those are the great conversations that the CFO really value from a marketer, which I love. Which brings me to my next question, because, you sort of alluded to the fact that not everything is online based on the different products. And a lot of the times we do fall into that performance trap as marketers, and it's digital because we can measure it and everything like that. Banks, they have aggressively actually embraced digital marketing and stuff like that. But how do you avoid over-optimizing the short-term results, and how do you find that balance, and what's in your mix for the different products that you're working with?
Okay, we have, when it comes to KPIs, we actually have a quite full suite, because we do measure our brand metrics, which is, the awareness, consideration, and then brand equities, the traditional way of looking at brand, which is it's also important. And then we also have our more business-related metrics, like lead generations, like credit card acquisitions. So we have like a full spectrum, so that when we share our KPIs, then we also can share. People would know. Brand metrics is probably medium and long term. But when it comes to business, whatever we can measure, as you said, on a lower funnel, then it's acquisitions, leads, like viewership, like traffic, all this, right? So we have a very full suite. So that's one side of the balance. Sometimes even the brand metrics may not gone up, for a month or 2 months, but then our business metrics can be okay because we're just driving credit card acquisition and our offer is great, So that's, at least from a KPIs perspective, we have great story and we have realistic story to talk about. Okay, so that's one thing, it's the KPI. And then secondly, interesting enough, for a bank, we actually do a lot of events.
Okay.
So it's not just advertising or lower funnel digital. We do lots of events, and these events are important. Like as I was just mentioning, our CIO house view, right? We have our global market outlook once every 6 months, and we invite hundreds of clients to luncheons and talk about that. And then we also have like smaller investment seminars. So your question would be, how do we measure the effectiveness of these events? Because it's a big investment.
Yeah.
Like to invite 500 clients luncheon in a hotel. And so we have a separate set of metrics to measure effectiveness of events. We do, like, for example, we do ask our clients, before and after you come to this event, do you have, how do you feel about the brand, the delta? Like, do you feel differently about our wealth expertise? Do you feel differently about our insights? Like how much insights we're able to provide you? So that's more brand, right? But then at the same time, after these clients, these are mostly existing clients, and we invite them to our events. Then we also, like, afterwards, after like some period of time, we'll check with the RMs. Have they invest more with us? Have they put in a little bit more money with us? Like after the event, and the RMs will also help us to, check with the clients. What's like, is it because what you heard in that events and all this? So I guess another advice is, you don't set up your KPIs solo, just marketing. You set up your KPIs with your business partners. So then, firstly, they feel like, we respect them and it's a co-create. But then at the same time, it's more practical.
Yeah.
Because, I wasn't
born. You need
born,
the buy-in, right?
Yeah. I wasn't born in the banking world, right? I joined the banking world for a few years, and I had to learn a lot from my business stakeholders. And I remember I really wanted to share. It's quite interesting because we did a lot of these events. Actually, a lot. You'll be surprised, especially in Hong Kong, we have one event almost like every week.
Wow.
Yeah,
that's a lot.
That's a lot. Like, not everything is big. Some is like small, but big or small, in branch, we invite like 20 clients.
Money, right? Yeah.
And I actually asked my distribution head, I said, we're doing all this is it really like helping with the business? Because it's a lot of effort from marketing and from their teams as well.
Yeah, of course.
Not just money. And, I'm not going to talk about numbers, right? But my distribution head, she said, yes. And she would literally tell me, after that event, the other day, we talk about travel and foreign, FX, and so clients put in so and how much money in us. So then I realized, that's interesting. So I can measure from that perspective, right? So do talk to your business, stakeholders and learn from the business. Then they'll tell you, and then you come up with a new way of measuring.
Yeah. So regards to measurement, great tips that you've got there for the marketers. I think the number one is that you said you've got to align with your business partners. So, the RMs being the relationship managers is so important. And I think the other one that a lot of people forget, which you've done obviously very well, I don't know if you've realized you did it or not, but you set up what data you wanted to capture from the beginning.
Yes.
And I think that's one of the challenges a lot of people have is they go, I don't have the data to be able to justify it and I don't really know, but they haven't painstakingly made the relationship with the people they need to and say, this is valuable for us to understand, to get you more money to invest, and let's work together on it. Because it would take a lot for the relationship managers to feed back what's working, what's not. And what I think is brilliant, because I've had similar ones where I've worked with, like my RMs or whatever, the equivalents of them. And it's the insights also that they give you, like what you just shared there is like, we did talk on this and they were super interested about, and that led to more investment. And things like that sort of feed back into the marketing of what is the content that you want to produce out. Because like you said, you've got so many different things you've got to do on a marketing, from thought leadership awareness right down to tactical. So I think there's some really great tips there that I love, which brings me to the next question, because obviously you're someone that is thinking outside of the box. And I feel like we're quite like-minded in that you're creative, but at the same time quite data-driven. And there's very few people I've found like me that are very square in the middle. So it's really exciting. But justifying creative ideas internally often is a challenge for marketers. So when you have a bold idea or creative idea, how do you build that case with leadership? What are some of the things that you, and take us through that whole journey, what you ask your team to do before you even start to build it? Because there's some wonderful big brand campaigns from Standard Chartered, which has done a great job. But obviously, sometimes it takes a bit of nerve as a marketer to push some of these through.
Yes. I guess first you need to establish yourself in the organization.
Yep.
So that people at least trust that you're sensible. And you're creative, you're innovative, but you're also sensible and you know the business and you think for the greater good of the business. You're not just think for you creating your own big campaign. I think that's very important in a commercial organization, because I think sometimes it's not fair that people think marketers only dreamers.
Yep.
So they, they're creative. They just want to like play around and do what they think is the right thing, but it may not be right for business. Of course, I do not agree with that, but sometimes we have that reputation. So it's important that if you're new to the organization or you haven't established yourself yet, no need to like be way too creative. At least that's how I feel. You need to really build yourself first.
Good tip for the marketers.
So that's number one. And then once you have the trust, people know that you're sensible, you're thinking for the business, then, you can, act a bit like out of the box, as you said. So my journey would be, first, I will look at the bigger trends of what's happening in the world. So I think from outside in first, because there are trends that you cannot deny.
Yep.
Right? For example, I don't know, I'm just giving you an example, like High Rocks is growing like crazy.
Yes.
And actually, do
you do it?
I just did it in May in Hong Kong,
one of the ones that
and we
started.
Sponsored High Rocks.
You sponsored as well. Okay.
That's why I can use it as an example. So High Rocks is growing crazy. So then I have the data to support that. This is growing, and this is maybe the right area to go into.
Yep.
Right. So there is the data, and they should, if they're like normal like us, they should have heard that, friends are doing High Rocks. So it's not just data. Sometimes it's also the decision makers who their friends are.
Yeah.
Because whatever
Definitely.
they hear, they trust it.
Yes.
No matter how much you say it, if from your mouth, they think, oh, you have your ulterior motive. But if their friends are saying it, they say, okay, they buy in. So anyways, it's a big trend first. You look at the trends. You look at what competitors are doing and not doing. So from an external perspective, you have a very strong context. So that's one. And then secondly, internally, you need, as I said, right, you need buy-in. You need a few allies, business heads that you know that there will be, similar vibe, and then you have their buy-in. So at least you have, some people in business side you buy in. That's secondly. And then third, of course, you build a business case. And then when you build a business case, as you said, right, I usually set the KPIs and the business goals first. And then I'll work backwards. And I also have alternatives. And I also sometimes if I'm not sure, I won't build the case way too big. I'll try it out first.
Yeah.
Like, for example, High Rocks, I tried it in one market. I tried it in Hong Kong first. And then based on that trial, then I would know like how successful it is. Post-event measurement, like what are the people who join High Rocks in Hong Kong? What are their profile? Can their profile match our like future potential clients' profile? All this, right? Then I build a little case. Then now I have, enough data. Then maybe I can convince people I'm going to do it like multi-countries next year. I don't know. I'm not saying that I would. But you know what I mean? So this is how you build the case together for bigger and bolder ideas that they're not familiar with.
I really love those tips about creativity, the outside thinking in, the trend sensing, along with, aligning with your stakeholders and building that small case for success. That's where I think those big, bold ideas really come from, which gives you the confidence, de-risks what's coming out in the future.
The CMO Office is brought to you by Analytic Partners, the global leader in marketing mix modeling and commercial analytics, which turns data into expertise to help marketers make an impact in the C-suite. What kind of impact? Last year, every dollar spent on Analytic Partners, we returned $70 in incremental revenue. Find out more at analyticpartners.com.
What I want to understand, though, is once it has gone, so that's an event, but let's say you have a big brand idea and it's big creative. How long do you normally let it wear in? Are you one of those, because when I look at Standard Charters, and it might not just be Standard Charters, it could be other companies that you've worked with as well. A lot of marketers, we get tired of our campaigns and we tend to change them up. But at Analytic Partners, we have data that absolutely proves creative is one of your highest ROIs. And on top of that, you need to let it wear in. So I wanted to understand from you, what's your point of view on how long do you think it needs to be, and how long have you sort of let your brand campaigns wear in? And has it been because of the budget constraints, or has it been because you actually believe and see that it's wearing in?
It's a great question. It's actually no, because it's the kind of question that I'm thinking now, because we're preparing our next global campaign. Usually, I'll tell you the usual. It's more intuitively. I will run the same creative assets for at least 12 months.
12 months.
For me, it's usually at least 12 months. But when I say usually, it also depends on how heavy your media bursts are. And also it depends on, as I said, the market situation, whether that messaging or whether that creative asset is actually relevant, because that's important.
It is, yeah.
Yeah.
That's where it sort of changes.
Correct.
If the cultural relevance changes,
Correct.
You got to change.
Yeah, right. If it's during a wartime, you tell everyone, oh, it's now the time to invest. And it's like, so it's also...
That is a perfect example.
Correct.
A very timely one.
Yeah. And it happens a lot these days, I realize. So we need, as a marketers, we also need to be very agile.
Yep.
And so but then another thing which I love about data is data can tell us when and which assets wear out. And sometimes some of these assets, quite interesting. Sometimes when we create like a set of assets, we thought this one, would perform better than it's the other one. So that I really trust data And especially I look after multiple markets, right? Different markets also have, different cycle, and also they so it's interesting. That's when data actually comes in and helps a lot. Yeah.
I have an interesting stat for you. So at Analytic Partners, we analyzed 51,000 campaigns, brand campaigns, 51,000. How many do you think got to the point of wear out? And the point of wear out mathematically is decided by the fact that when we measured the campaign, the brand campaign, that the cost of making a new campaign was profitable.
I know what you mean.
So how many do you think wore out? I want to shock you here.
Okay. I would think, because you said it
because I said like I'm going to shock you.
10%?
14. 1-4. Only 14 wore out.
Yeah.
So, but what I wanted to clarify there, because you talked about that there, and I think it's one of the topics I love talking to marketers about now with creativity, is that the algorithm platforms, especially on social, they cap out because of the actual ad, not because it's worn out as a campaign idea. And so there's actually lots of little things that you should be doing. So some of the research that we're seeing and some of the data we see in the back end of our commercial mix is that, say, for example, you have a credit card ad and you have yourself, female, Asian, and then you might have blonde, female. That's two different ones. It broadens the reach out, because the problem is what happens is it's, even though you might set it as a broad reach campaign, okay, because you load the data set out and it's optimizing for conversion, it starts to narrow down, and then it starts to spam the people that are already in market, and you run it so long that eventually they don't want it anymore, and it's not broad enough. So to broaden it out, what you need to do is slightly tweak some of those. So you want to have, you, me, couples, families, young, old, all the different ones, and those variations starts to broaden out the actual reach again, because it's more of a digital thing that the campaigns bear out. But if you look at it, the reason we say that wear out as marketers, we don't let it go, is that it builds that mental availability. And, we have clients, we have one client in Australia who's desperate to change because they're just bored of it. But the problem is their commercial mix 5 years on still says,
wow,
it's
really?
not time to change.
Like 5 years.
Like I said, the tweaking of
actually helps.
The tweaking of what it is, yes, it's absolutely. And slight refreshes of things like that. But the overarching campaign, like, I still remember Do Good. For Standard Charters. And I know, UPS will be unstoppable, right? So there's certain campaigns that you just stay in your head. And they have to wear in. And as marketers, that's why I love talking about this, because normally marketers, we're like, I wear in. It's like 12 months. And you're like, okay. And we have to separate out. And I don't think there's enough talk about it or information shared of that, overall the campaign. And if you ask the people it's wearing in, but it depends on the channels that you're marketing on, of what you need to refresh and how you need to refresh it.
Correct.
To actually make it still relevant.
Yeah.
But I'm glad to hear that you like wearing in. So that's super good. And hopefully those tips helped when you start to plan.
It definitely does.
one.
It definitely does. But I'm also very aware of the fact that, as you said, right, the messaging and what we are building, we should give it time to sink in.
Yeah.
But maybe it's really the creative alteration that we can, twist and change. But whatever that we're trying to build, that positioning, it needs to stay for a longer time.
Yes.
Usually when I talk to, my boss, whether it's in an interview or like appraisal, I always tell my boss, you have to give me at least 3 years to build something.
I like that.
If you don't give me 3 years, I will not be able to build it. And so I can't, because I believe that for a brand to build a distinctive positioning, it takes time.
It does.
And of course, we do good work, we do different creative, but it's just a different way of saying the same thing for a period of time so that we can build that.
Yeah, no, I agree. Right, I'm going to skip ahead a couple because there's a couple of questions I really want to get your answers on. Now, obviously, we have been in World Cup season right now, and you are a sponsor of Liverpool FC.
Yay!
Along with some of the other sponsorships in F1.
F1, yes.
Yeah, so obviously these are huge global platforms. How do you measure something properly like that? How do you justify the spend when you're looking at those really big global sponsorships?
Yeah. Well, first, I have to say we also have a dedicated team.
Okay.
It's a global sponsorship team. I have like great partners there to help us to manage and also, as you said, measure, right? But I can share like how we're measuring it at the bank. So yes, it's a very rigorous process of looking at the investment because it's huge investment.
Yes.
And it's multi-years. So we look at it from a brand perspective.
Yep.
It's actually quite similar in the sense that we look at it from a brand perspective. We also look at it from a revenue generation. For big sponsorship, like F1 and LFC, is not just brand awareness. There's a lot of clients engagement and hospitality.
Okay.
So when it comes to client engagement and hospitality, we can actually measure how many clients we're bringing over.
And do you come back to like what you did with the RMs before? Of
Correct.
You've
And
got
also,
this engagement. What's the outcome coming out of it?
Yeah. And also, we actually set the criteria of what are the clients that we bring over. Then we already know. We don't have to measure afterwards.
Okay.
I'll give you an example. Like, not that it's real. I'm just like making it up. Okay.
Make up numbers.
Like,
That's okay.
Yeah. I'm just making it up. Which I get asked a lot, as in, oh, can you get me tickets to the LFC game, so and so, right? I say, yeah. Give us $1 million US, put it in the bank, and I'll give you 2 tickets. I'm just, as I said, making up. But you know what it is. So we select the kind of clients that we want to bring to an activation. And when we select it, it's the criteria which is related to commercial terms. Then we can, then you understand, then by way of doing this, then we almost can sort of, at least we can set the target of the kind of revenue that we want to generate from the different deal at multiple years.
In my previous roles, I've actually done a lot of sports sponsorship. We had the ESPN F1 and extreme sailing and all that sort of stuff. So I'm with you on all of that. But I always had a rule of, especially when I used to go and we'd talk about it, they're like, okay, how much do you need for the sponsorship? I'm like, well, that's how much the sponsorship is. Now double it, because that's what my amplification budget is. Do you have the same rule? And what do you do to amplify and
we do,
to really make it worthwhile, make the investment worthwhile?
Yeah, we do have this same rule. So when we build in the business case, we look at the pure sponsorship fee, and then we look at the activation money and the amplification money. And we also look at like the paid and earned value.
Yes.
Because there are a lot of time, F1, when we announce our F1 sponsorship, it actually gets us a lot of earned media value. So we look at both the pay, earn, and own channels as well. Plus, as I said, the business generation value as well. Yeah.
And obviously you've got the offline activation, but do you maximize it throughout the year with, leveraging the assets digitally and other advertising?
Yeah, we do. We leverage the assets on product campaign as well. Actually, recently, this year, we leverage on our LFC players. Yeah. And we use the LFC's like precision, when you play football, it's a lot of teamwork, it's a lot of precision.
Yep.
And it's a lot of practicing and having the experience and expertise, right? We matches all this to our own product like Signature CIO Fund to talk about how, we have the expertise. It's a team of different funds put in on the same platform, all this. So it's a great campaign. It drives a lot of good business leveraging on the assets. So we don't just do it as a brand, as I said. We leverage the assets on product campaign as well. And it's mostly digital. And so it's all trackable. So we can actually say, these different assets help us to drive so-and-so business results.
That halo effect that it gives. Sports sponsorship, I love. I think a lot of people don't realize the halo effect it can give. When you're looking at the brand fit, It's about building the mental availability. So that's number one, which links back to the brand. But that halo effect, it's because, when you come into sports, it's the feeling, it's the emotional feeling that you get out of it. And I love that you're maximizing it throughout the year, offline and also digitally. I mean, we find with the clients that we work with, obviously you can choose sponsorship for different reasons. You might have an activation where, like yourself, it's a global partnership. You're able to run it the whole year, which is optimal. That's what you want to do. But sometimes you don't. You might get like a small amount where you could do just the F1 in Singapore. And we see that if our clients really maximize that opportunity, it really can increase their ROI for the short-term investment. And one of the things that we have seen is when it's amplified on social, that we see the ROI 2.1 times increase on average for our clients, just because that's what people do when they go to events and sporting things they want to share on social. It's a very social thing to do. And so it sort of ramps up all of that amplification that you have very quickly.
Oh, yeah. Last year, we brought LFC first team to Hong Kong.
Yes.
And during that week, our social media performance actually peaked.
Blew up.
Yes. Peaked.
Amazing.
Yeah, because at sports marketing is really about passion, and people are so attached to it, right?
They are, and
that's why
it's that halo effect and building that mental availability that you're associated with it, and the feeling that they get out of it, and then the long-term tail of that is that they might be interested in some of your products, or at least you come into consideration when they're thinking about things because they've heard about you, which I do love. So that's great. And now I'm going to pivot a little bit because we talked about sponsorship, which is great, but from wealth to health.
Yes.
So one of the most interesting shifts that I've seen you make is into the health and wellness. What drove that pivot from a marketing perspective?
Okay. Well, first goes back to business strategy. So this is our business strategy.
Okay.
And we're looking at supporting our affluent clients' journey, right? And the more and more we realize for high net worth, or even ultra high net worth and affluent clients, they're really into health and wellness. They have all the money, but you need to, you need longevity
to stay alive.
Yeah, exactly.
To still look good, still be able to walk.
And to enjoy your life, enjoy your wealth. So health and wellness is, go back to what we discussed, it's the trend, it's the big trend. So first, that's where our business to go into. And then from a market, that's great, right? For me, that's great because there's so much interesting angles.
Yes.
And there's so many emotions that we can build in when it comes to health and wellness. So from marketing, to answer your question, from a marketing perspective, what we do is we can dial up our content.
Yes.
To make it a lot more relevant, multifaceted angles, and also more emotional. So that's one. Secondly, it's engagement that we do. And also the KOLs that we use will be very different moving forward.
Yeah.
And plus, I would say, we define wealth differently. And this gives us the differentiation from our competitors. Because to us, wealth is not just about money. Wealth is really about your well-being and how well your life is lived. And it's also, linked to legacy somehow.
It's so interesting. Did that come from consumer insights? And did you really try to dig down into what's the emotional positioning? Because it seems so much more emotional than wealth and legacy that we hear from the other banks, right? Especially even when you talk about it, you're like, it's about your well-being. And I'm picturing sitting in Bali and yoga and all these sort of lovely spas and stuff like that. And I'm like, yes, that is something that I would want in my
and they are expensive, right? So you need money.
Yeah.
So it's all linked.
I'm thinking of the expensive spas.
I'm sure. Yes, it actually came from consumer research.
Okay.
And that's part of, effectiveness as well, because we need to have the data and listening to our clients. And this is actually from them. It's from our consumer research, from how we understand our affluent clients. And luckily, I also, in the bank, we also have a great research team who help us to continuously digging into our affluent and high net worth segments insights.
Yeah. I think they would have been digging in because, like I said, on the surface, you could come up with health. but the emotional level that you're sort of bringing out of that in the distinctiveness
I think
is quite unique.
Correct. And I think it comes from the fact that more from a wealth side is a lot of clients are mentioning their legacy, the need for building their legacy for, legacy planning. But then when it comes to legacy planning, you cannot not think about that means longevity.
Okay.
Right. So, slowly, this comes up. But at the same time, it's also a trend. If you look at the trend now, like people like health and wellness, mental well-being is actually a big trend in the last 5 years. So we're capturing all this.
Back to the trend setting.
And then turn it into propositions that we can talk about.
I like that. So over the past few years, you've obviously been with Standard Chartered doing a lot of great stuff. What are some of the changes that you've seen in marketing that you sort of, obviously AI is one of them, but not just that, as you've got older, more established in the career, like you said, you're able to take bolder moves. What are some of the changes that you've sort of embraced or taken or seen in the last couple of years in marketing and your particular role?
I see that with the marketing team or the marketing communities within the Standard Chartered, it's actually a lot more data driven.
Okay.
From in the last 3 to 5 years.
And did it have a base level when you came in, or were you the one that went, okay, we need to fix this?
We had a base level.
Okay.
But then because we had that vision, the people that I hired needs to be are more data savvy and more measurement driven, that's for sure. Plus, we also give our teams a lot of training. And we also build that discipline of looking at business case, setting up the goals and the KPIs first, and then look at what we do. And also setting up the discipline of having monthly performance report to I told you, to the CFOs and the management teams. These are all part of the process of building that trust using data to prove the value of our work. But it's not just for the sake of doing reporting. I and my team, we do look at the data and pivot what we do. And sometimes we just stop what we thought we wanted to do because the data tell us otherwise. And having the data there also, to be honest, also gives the opportunity for the business to challenge us. But we're fine, we're open to being challenged. And then, as I said, right, we change. So that's one change. AI for sure. But the interesting thing is I also see how we are working a lot more closer with business teams to understand business needs and also to understand how they operate and what they think. Because in that case, then marketing can be much closer to business.
Yeah.
So I see all this, evolve.
Which is so important that we are closer to the business. And I think that's really, was your predecessor as close to the business, or is that something you've been able to come in and do for the marketing team?
I think, I'm sure, people before me, they were also, very close to the business. But I think for me, I see myself as a business leader. It's just that my specialty is in marketing. So I'm very curious about commercial side of the business.
Yes.
I just feel like I'm, creative. I want to consider myself, because I'm more creative. So I've been specializing in marketing. But in fact, I'm there to help to grow the business. Yes. That's why I need to know, as I told you, I need to know whether these events actually drive revenue, what kind of products the best time to sell this time of the year, or what's happening when it's happening to the interest rate or the stock market, or So it's just, I guess, me also very curious as a business leader.
It's funny you say that. One thing that's emerging after talking to so many CMOs like yourself on this podcast is that the strong leaders like yourself that are getting growth for their companies are curious. It seems to be a trait that is definitely coming through. So I think definitely for listeners out there, if you want to be a CMO that can drive growth, it's have that curiosity on a commercial side, like you said, not just on the marketing. I want to bring you back just before we finish up around the management. I just had an add-on question. So obviously it was a big journey, and I know you have commercial mix, which is wonderful, but when you started, was it more last click attribution? Did you have to go on that journey, or was the base level already done and you could just sort of evolve it from there?
I have to say, 5 years ago, marketing and the bank was more brand metrics.
Okay.
Yeah.
Yeah. Okay. I can see the journey you were starting.
Yeah. And then we started this journey to build in the full funnel.
Yes.
The full funnel perspective, the full funnel KPIs, as well as linking the full funnels to the business. And then recently we also added the, events, the pre and post events measurement as well. So yeah, and then now with AI, right, I'm actually thinking there may be more that we can look at from a measurement perspective.
Wonderful.
I guess it's not just the what to measure.
Yeah.
I think in the future with AI is when to measure.
Okay.
And also how frequently we look at the data and how quickly we respond.
Yes.
Before I joined Standard Chartered, the main bank, I actually worked for Mox, which is the trust in Singapore equivalent, because it's a virtual bank. So, the tech stack is different. The channel is different because there's no real branch. It's all digital.
Yeah.
I look at the data actually real time. I look at acquisition real time. And back then, because I was the chief client officer, I was responsible for a lot of business metrics. So me and my team, every day, we regroup 3 times during the day.
3 times?
Yeah.
Wow.
To look at, do we need to pivot or change the creative that we're using? Because we have a daily target of acquisition. It's quite big pressure, but it's quite fun. Because I know every day how many clients I need to, draw in on a daily basis. So 12, 3, and 8 p.m. Because by the time, 7, 8 p.m., if I don't meet the target, that day probably gone. Then I need to make sure tomorrow I have the right creative or the right channel mix to compensate what I didn't get that day.
That's a lot of pressure.
So it's real time.
Yeah. I mean, I would just say on that, I think, again, it comes back to marketers have to remember you're optimizing for channels and for short terms. You've got to make sure, like we talked about at the beginning, was you still have to create the demand for future demand. So it's important that brand comes in. So it's always a balance between the two. Well, it's been a wonderful conversation today with you, Haymans. Amazing takeaways for everybody listening. I think some of the key standouts for me was the trend setting and how that is helping you sell in your big creative ideas. Wonderful. Having that base level understanding of all the things that are outside of marketing and what marketing does and what levers you have to pull on to be able to help with growth and being able to articulate that with the CFOs. And I think some of the soft skills that came through that I'm seeing emerge from all the top CMOs is, it's stakeholder management. It's making sure that you are closely aligned with your business partners and getting them involved and getting them wanting to give you the data, along with, having those stakeholders when you have big budgets, big creatives to sell in. So thank you so much for your time today.
Thank you.
Standard Chartered's doing amazing. So keep it going. And I'm excited to see what the next campaign is next year then.
Great. Thank you. Thank you for having me.
Don't forget, you can get weekly effectiveness insights by subscribing to our Substack at the-cmo-office.com and daily short videos on Instagram and TikTok. Thanks for joining.